Hi there, I'm Darren McDermott and you're watching The Week Ahead. I'm joined on the line by Jarrett Davis from Smile Global Management. Now Jarrett, all eyes will be on the Scottish referendum this week. The pound is already having its worst month in more than a year. Now Jarrett, are you expecting a yes or no vote? And what is your short-term forecast for the sterling versus the greenback?
Would the referendum think that it will be a no? I think there's a lot of speculation, but I think it will be a no. And I think off the back of that, if it is a no, I think the sterling will rally back up to around 164.50 over the next couple of weeks. Actually, I've got some UK data. We've got CPI and average earnings, which normally, if the referendum wasn't here, those two figures would be really important because basically that's what the Bank of England are using to judge whether or not to raise rates. So if the CPI and the average earnings come out quite positive, and then the referendum is a no, I think that could, we could see a real big sterling rally because the market will then think, okay, well that referendum's out of the way. Now the focus is back on the Bank of England and rate hikes. The data's now there. There's more pressure to hike. So I think I think those two data points are actually really, really important, but in a weird kind of way, not when they come out, but maybe after the referendum vote has been settled, the market will probably react to them kind of in a delayed way. So they're definitely worth watching out for over the next, for the reaction over the next week or two.
Jarrett, we also have the SNB rate decision this week. Now, do you think we will see the Euro Swissy coming under renewed pressure? And are you expecting to see a further decline in Swiss producer prices?
Well, the Euro Swiss is an interesting one because the SNB obviously defending the 120 cap, and that was quite interesting to see how that reacted in the aftermath of the ECB surprise rate cut a couple of weeks ago. And basically every other euro pair dumped except Euro Swissy. That kind of just stayed solid around the 120.50 level, which I think is quite indicative of how serious the market's taking the SNB pledge to keep that cap. So I don't think the Euro Swissy will get much below 120. I think it'll keep selling off back down towards that 120.50 level, but it looks like the market for now is taking it pretty seriously, and that 120 is safe. In terms of the debt, it hasn't been the best. We probably could see a further decline, and I think on the SNB rate decision, we'll see the SNB. I think they've got their monetary policy assessment as well. I think they will just reaffirm that the caps. They'll defend the cap, and they'll also look at other possibilities such as rate cuts if they're needed.
Traders will also be watching the Fed rate decision. The US dollar is having its longest rally in 17 years, sparked by expectations of a rate hike this year. Now, Jarrett, are you expecting any market-moving comments?
The market is clearly expecting the Fed to become hawkish. There's a lot of news about that. There's a lot of expectation in the market that Yellen will kind of remove the word considerable from her statement, or at least kind of discuss the possibility of hiking rates, possibly even at the end of 2014. Personally, I feel that the market's getting a little bit overexcited. I think if you look at comments she made in Jackson Hole just a few weeks ago, all she basically said was, well, it will purely depend on the data. We know she's looking at the labour market. We know she's looking at inflation. And to be honest, those data points, they've been good, but they haven't been, they haven't really been anything stellar compared to what we've seen in the last 3 months. They've just kind of been chugging along. In fact, the last NFP was actually a little bit below expectations. So because she's dovish generally, I think that she'll still, and the Fed as a whole will still kind of use that mixed data to kind of maybe hold off and just say, just tell the market that we've got time and we're not going to hike rates any sooner than we need to, which in reality I think could cause a bit of a sell-off on the US dollar because of how excited the market has got over the last couple of weeks in anticipation of this, this hawkish tone.
Jarrett, moving over to Australia, the Aussie dollar sank to a 6-month low today and the local share market fell as investors reacted to figures signalling a slowdown in China. Now, how low do you think the Aussie will go and what will you be closely following in the region?
Well, with the Aussie dollar, we think it's kind of probably a little bit undervalued at the moment. Everything that's caused the drop-off or the sell-off, none of it's really been what I would call fundamental. None of it's really been anything kind of a long-term concern. It's all very short-term. And a lot of people in the market are thinking that the Aussie dollar is the only one that kind of hasn't sold off against the US dollar, so the market's kind of playing catch-up. So in terms of this week, I don't really think it will drop much below maybe 89.50. I think it will kind of probably stay supported for now, unless, of course, we get some more bad news. But in terms of the Aussie dollar particularly, I think generally it's probably getting a little bit, as it gets into the 80s, it's definitely, in our opinion, getting a little bit oversold.
Jared, thank you very much as always. A pleasure speaking today. Well, viewers, do stay tuned as we have plenty more just like this heading your way. So see you very soon.